It does take us to our talk of the tape. Whether the momentum that sent stocks to new record highs just over a week ago is fading and fading fast. Let's welcome our panel. Ankur Crawford is with Alger, Joe Terranova with Virtus, a CNBC contributor. They're both here at Post 9, and it's great to have you. All right, Ankur, I mean, why is NVIDIA down 6% now?
Well, it really shouldn't be. I think they reported and guided actually better than people's expectations. The only nitpick would be the gross margins, and quite honestly, that had been telegraphed, from almost 3 quarters ago. So I think it's down more so because the jitters in the market versus it being NVIDIA specific. And there is a rolling off of the momentum trade. NVIDIA is pulling back with it.
Joe, are you surprised?
No, I'm not surprised. We spoke yesterday on halftime about what was being reflected in the option market. It seemed as though there was more positioning towards the puts than the calls. Let's remember, this is the first earnings quarter that we have had since 2022 where NVIDIA, relative to the prior quarter, was down. It was down 9% since its last reported in November. So I'm not surprised by the price action at all. This is a moderation in revenue growth. That's clearly what it is. Now, the revenue growth is really strong at 78%. We like that. But 1 year ago, we were talking about 265% revenue growth. And if you look forward into the coming year, the revenue growth continues to decelerate. So I often say you can't have it both ways. You can't get exuberant about the revenue growth accelerating, and then when the revenue growth begins to moderate, not understand that the market is effectively going to price that in. I don't think it leads to a massive deterioration. I think NVIDIA is in a sideways consolidation range, but I think you just have to understand it's just not what it was last year.
But nor is the valuation. The valuation has come in as the stock has gone down. It's down at least 14% since its high.
Yeah, but that doesn't give comfort to the overwhelming majority of managers who are overweight this name. They're not sitting there and saying, okay, it's a cheaper valuation, so I'm going to hold my footing here in the position. They're going to reduce the position marginally, and I think that's what's going on.
Well, I mean, you got a portfolio manager sitting right next to you. Are you thinking about doing that?
Actually, I do think valuation does matter. Mm-hmm. Everyone knows there's slowing growth. NVIDIA is the dominant compute center that is driving forward this AI revolution. And so valuation does matter. And today, if you look at consensus numbers, it trades at about 20 times, 26. The buy-side numbers are higher than that. It trades at less than a market multiple on 26. And so, we're waiting for the Blackwell launch. I will bet you 2 months from now, as Blackwell starts to launch, everyone's going to get so excited that Blackwell is launching and these big numbers are going to put up that all of a sudden that 20 goes to something higher.
Don't disagree at all. And I agree with you. Valuation matters when you're thinking about investing for the long term, but trying to explain the dynamic of what we're seeing today, valuation is not in the equation of what's motivating price to move lower today.
Why haven't the mega cap stocks traded all that well? Many are in correction territory. Alphabet is down 17% from its high on February 4th. Microsoft 15, July 5th. NVIDIA down 14, as I said, at least. But, I mean, as the stock is selling off here a little bit more as we head towards the close, it may be even more than that. January 7th. I mean, Meta went up 20 straight days.
It did.
Escalator up, elevator down. That stock is down near 10% from its high on February 14th.
Yes.
Why? Why haven't these stocks traded well?
I think it's difficult to pinpoint a specific explanation as to why. I do agree with Ankur. You've got a little bit of a risk-off environment. I think the 3 names in the Mag 7 that I would focus on for opportunity is Meta, Amazon, and NVIDIA. When you're thinking about the long term, I think there's clearly some challenges as it relates to Apple and Microsoft, and even to a certain extent Alphabet, rather. But I think it's a risk-off environment more than anything else that we're seeing here. And I think these names have been the names that over the last 2 years, the overwhelming majority of money managers have gravitated towards, not just necessarily because they desired to be there, but they had to be there, otherwise they're underperforming.
Yeah.